All right, looks like we are recording. Pretty spontaneous, but figured I would share a trade example of this long on Floki I just entered. So doing like a basic market scan, more or less how I found this was I went to my watch list here, sorted by change percent to just see what was moving and then liked what I saw. Another good way to scan. So you start at a higher time frame, like weekly. You see how the RSI looks. Pretty much you want something above 50 that doesn't look like it's shitting the bed. This doesn't. This looks good. We're a little overextended, but being overextended, you can still run for a very long time. So this basically just tells us that on a weekly time frame, we've been pushing up strongly, which also what the chart shows us. Floki's been doing pretty well for a good few months now. It's 3-day, kind of the same thing. You could argue it's getting a little bit of a divergence here, but not something I'm super worried about given strength elsewhere. Not really a very strong looking div here. Daily, same picture. Daily, we've got the 50 bounce. So we're hitting the 50. If we continue from here, this is in a very nice position to push up, which is, in line with the weekly still having room to run. So far, so good. And then on the 12-hour is when I actually took this trade. And I entered based on the stochastics. So we'll minimize the other stuff for now and just focus. So I'm planning on releasing, kind of trying to get the channel something cohesive, putting content out based on what I do, kind of having something I can be responsible to, or like an extra reason to really track what I'm doing and make sure I have a well-defined system, I'm using the system, and then recording progress. So I basically look at highs and lows of the market and match them to crosses of the stochastic RSI in those areas. This is a basic stochastic RSI indicator, but then I've added custom arrows to it just to make seeing the crosses easier because I really pay a lot of attention to the crosses. So the first thing, we have a 25 and a 70 EMA. And as you can see, we were pretty much capped by it for a while back in here. And then in line with, when the weekly started really to run, we got on top and then they've been acting as pretty good support and we've been staying above them. So you can see we're in an uptrend just based on our position relative to the EMAs. So how I will map out structure is we've got a low here. And I define a low as like the lowest point that price goes before there's a reversal in the stochastics. The reversal is whenever there's a cross, overbought or oversold and then a cross the opposite way, and the cross sticks, which means the stochastic, makes the full rotation back to the other side. So the stochastic cross would be here, and that's in line with a market low right here. This is a low. Then that in turn will lead to a high. The high is like the stochastic that's overbought and then crosses and then completes the full rotation based on that cross. So that would be this cross here. And this is also in line with the highest point of the market. So we'll put a marker here for the high in line with this. And then ideally, this represents a low. I like this structure. This is a divergence. So we have price make a low, stochastic cross, and then price makes a lower low, very slight here. But the stochastics makes a cross in a higher position. So based on this cross here, we are assuming that this will be a market low in line with the trend, higher low, higher high, higher low, hopefully leading to a higher high, but I'm just targeting 2R because I'm being pretty systematic and I've done the back testing and found that targeting 2R every single time is positive EV. So that's what I do. Theoretically, if you want to get stronger with it, you want 4 sets of highs and lows. This one's a little hairier, so we've got kind of some low structure in here, lots of wicks. It's a little bit ugly. But I would say about this area is the market low. And you could count this wick pretty easily. And that's in line with this cross being the one that leads to the full rotation. doesn't lead to a complete higher high. So a little bit weak there, not 100% as good as it could be. But if you wanted to be a little bit more systematic and a little bit more discretionary, you've got a nice low down here. And then, stochastic cross rotates all the way up to here as a high. So based on this, we've got good market structure, like low, high, higher, low, higher, high, higher, low. And so to recap the reasons we have to take this, like RSI position on higher time frames, weekly, 3-day, and daily all look good. And then on our executing time frame, we've got a stochastic divergence, which is a very good signal. So we entered, stop below the swing low, just below the low here. And then targeting 2R being systematic. If we were targeting, expecting a higher high, you probably go for like a round number being run, like 48, give it a little bit extra run. So that'd make this a 2.72 trade, which I may do, but for now I'm just going to leave it at the 2 and see what happens. We entered and retracing slightly, but we'll see what happens. Figured I would record and share a trade example.